Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Thursday the 5th of April 2018. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Right, let's take a look at overnight changes and price moves to be aware of. A relatively quiet session over the last 24 hours as far as foreign exchange markets are concerned. I will just flag a reversal in fortune for the Aussie dollar and the Kiwi dollar, a partial one at least anyway, down around 0.31% and 0.21% respectively, and that's the direction of travel that we might have expected given trade war tensions. The yen has also given a bit more ground to trade at 106.90 against the US dollar shortly before we recorded the video. The dollar itself impassive really at 90.16 when measured by dollar index. So that's largely unchanged in the last 24 hours. Be interesting to see how that fares into the end of the week. In the world of cryptocurrencies, very modest movements for both Bitcoin and Ethereum yesterday, and the focus certainly seems to be elsewhere for the moment. Right, what's on the calendar? Events that may move the markets today. We've already had trade balance data for February out of Australia, and we'll look at that in a bit more detail momentarily. To come at 7:15 GMT, we'll have services PMI data for March out of Spain, accompanied by CPI Consumer Price Index data for March out of Switzerland. And then at 7:55, the first of today's major economic announcements, market services PMI and composite PMI data out of Germany for March, and that's followed 5 minutes later by the similar data for the whole of the Eurozone. So perhaps a chance to infer something from the German numbers ahead of the Eurozone numbers there. Fast forward to 8:30 GMT and to the UK, and we shall have services PMI for the UK for March. Services obviously the bigger part of the UK economy, so they'll be watched closely. And at 12:30 we have a highly topical data release, trade balance data for the US from February, and trade is obviously on everyone's mind at the moment. We'll also have the small matter at 12:30 GMT of continuing jobless and initial jobless claims out of the US. And at 1700 we'll have today's only central banker speech, FOMC member Bostic speaking once again. And to finish the day, if you're still in the market at 23:30, we'll have overall household spending data for February out of Japan. Right, breaking news and comment then that's caught my eye overnight. And firstly, Acting Secretary of State John Sullivan has met with China's ambassador to the US for talks about trade tariff escalation. Markets are thinking here that perhaps some diplomatic solution may yet still be possible. Meanwhile, Australian trade balance data prints ahead of forecast with a surplus of $825 million versus a forecast of 700 million. Yet economists believe that the country remains vulnerable to rising trade tensions, and therefore that individual figure is largely irrelevant in the current climate. Similarly, South Korea's current account surplus has fallen sharply in February to a figure just above $4 billion from a prior $8.18 billion, but it does remain above 2014 lows. Yet again, the focus is on the wider trade picture than this individual economic data points. Right then, food for thought, something to take away with you into the trading day and beyond. Why not think about this? The future path of inflation is a constant topic of discussion in major economies, and central banks' monetary policy is specifically designed to try and influence its direction. The chart opposite shows us the point at which inflation decoupled from changes in the US money supply, and this helps to explain why printing trillions of dollars for Kiwi has not forced prices higher over the last 9 years, and why in fact it may not be effective in terms of trying to drive inflation in a certain direction in the first place. Very interesting chart that from the St. Louis Federal Reserve, accompanying a blog piece which is well worth seeking out. Please take a moment then to read the risk warning. Trading CFDs and foreign exchange on margin can be a risky business. If you're in any doubt about those risks or the suitability of these products for you, please contact your Pepperstone account representative.